Vietnam has officially been upgraded to the FTSE Emerging Market status, marking a decisive turning point for its capital market. This upgrade elevates Vietnam from frontier to the emerging market universe, significantly expanding its access to international capital.
It is backed by a series of targeted reforms, from improved settlement systems to better access for foreign investors. But more importantly, this reflects a broader shift as Vietnam moves towards a more market-based financial system, reducing reliance on bank-led funding.
I'm Duang, and in this video, we'll look at what's changed in the market, what this upgrade means for investors, and what comes next. We're going to feature two experts, one from Ho Chi Minh Securities Corporation, one from Dragon Capital, to showcase our on-the-ground perspective as well.
The upgrade is the result of changes that have been building over time. So what has actually shifted beneath the surface of the market?
Vietnam has delivered rapid, meaningful reforms in recent years. It began with removing the pre-funding requirements in 2024, followed by the KRX system launch in May 2025, which improved execution and settlement. More recently, there's a Circular 08-2026 tackled key structural issues like the global broker mechanism and also failed trade settlement, while account opening and registration have been streamlined for foreign investors. Liquidity has also surged, with 2026 ADTV at around $1.2 billion, up roughly about 65% year-on-year, now exceeding many of our EM peers. Vietnam will enter the FTSE Emerging Market Index in September 2026 with an initial weight of about 35 basis points phased over 4 tranches across 12 months. Passive inflows are estimated to be at $1 to $1.5 billion. The active inflows are estimated at $4 to $5 billion with potential upside if reform momentum continues. While MSCI's process is independent, the FTSE EM upgrade is a strong signal that puts Vietnam more firmly on its radar and could drive more proactive engagement to shape a clearer reform roadmap towards the government's 2030 MSCI EM target. With reforms momentum accelerating, Vietnam could enter MSCI's watchlist as early as next year, according to our forecast.
But the story doesn't end with the upgrade. It raises a broader question: how is Vietnam reshaping its capital markets to support long-term growth?
Beyond the FTSE upgrade, Vietnam's capital market reform is experiencing a multi-layer reform driven by the scale of its growth ambition. To sustain double-digit GDP growth over a long period of time would require significant long-term capital, especially for infrastructure and private expansions. The current model, which relies heavily on bank credit, is no longer sufficient and can create concentration risk. The policy response thus has been a clear acceleration of capital market development to diversify funding, rebalance the system, and to mobilize domestic saving and foreign capital more efficiently. Vietnam is developing its capital market across several key pillars. Firstly, on market upgrade, to target MSCI Emerging Market status by 2030, alongside broader product expansion. Secondly, on debt market, to scale corporate, green and infrastructure bonds, and to enable offshore issuance for large projects. Thirdly, on institutional capital, to complete the REIT frameworks and accelerate pension reform to unlock long-term domestic savings. And finally, on innovation, to fully implement and roll out the 5-year crypto pilot to enable regulated fintech, blockchain-based capital raising, and digital securities. These reforms together should position equity and bond markets as a much more viable and sustainable source of capital for Vietnam's growth.
With the FTSE upgrade achieved, Vietnam is entering a new phase of market development. As institutional participation increases and reforms continue, the market is becoming deeper, more accessible, and more aligned with global standards.
And historically, markets tend to re-rate ahead of full upgrade cycles, making this a potential stage of that transition. Thanks for watching, and we'll see you in the next video.